By the mid-2010s, Snapchat had become one of the most influential social media platforms in the world, while Snap Inc. increasingly positioned itself as a camera company capable of reshaping how younger generations communicated online. The app's core idea initially looked radically different from traditional social media platforms dominating the internet at the time. Instead of permanent posts, public timelines, and heavily curated online identities, Snapchat focused on disappearing messages, quick camera communication, temporary stories, filters, lenses, and private interaction between friends. That design helped Snapchat spread rapidly among younger users, who increasingly preferred faster, more casual, and less permanent forms of digital communication. The app became deeply embedded inside youth culture across schools, universities, and mobile-first social behavior, while millions of users opened Snapchat repeatedly throughout the day to send photos, short videos, and direct messages. Investor excitement surrounding Snap accelerated aggressively as the company expanded user growth, advertising systems, augmented reality features, creator programs, and mobile engagement at enormous speed. By the time Snap went public in 2017, Wall Street increasingly viewed the company as one of the most important consumer technology growth stories in the social media industry. The company's valuation climbed into tens of billions of dollars, while investors believed Snapchat could become a dominant long-term platform for mobile communication, advertising, entertainment, and augmented reality. Externally, the growth looked extremely convincing. Daily active users expanded rapidly, engagement remained extremely high, and Snapchat increasingly positioned itself not simply as a messaging app, but as a broader mobile camera ecosystem capable of monetizing massive amounts of user attention. What made Snap especially attractive to investors was the intensity of user engagement underneath the surface. Many Snapchat users opened the app repeatedly throughout the day, while younger audiences increasingly spent large portions of their mobile attention inside Snapchat's messaging, stories, and camera-based social systems. But underneath the hyper-growth narrative, Snap's business model was becoming much more dependent on maintaining user attention, advertising efficiency, platform differentiation, and continuous product innovation than many investors initially understood. Unlike subscription businesses generating predictable recurring payments, Snap depended heavily on digital advertising revenue, which meant the company needed advertisers to continuously believe Snapchat could deliver measurable attention, targeting precision, engagement quality, and long-term growth at massive scale. The deeper Snap expanded, the more the company discovered that maintaining dominance inside social media required constantly defending user attention against rapidly evolving competitors, shifting mobile behavior, changing creator ecosystems, and increasingly aggressive platform competition across the entire digital advertising market. What initially looked like one of the strongest growth engines in social media was gradually becoming a business increasingly dependent on maintaining engagement, relevance, and monetization efficiency inside one of the most competitive attention markets in the world. Snap's business model was built around one core assumption: that mobile attention could be transformed into a massive, long-term digital advertising engine. Unlike companies selling physical products or charging subscription fees directly to users, Snap generated revenue primarily through advertising displayed across Snapchat's ecosystem. That made user attention the company's most important economic asset. Every story view, video watch, discover session, and creator interaction created additional advertising inventory Snap could potentially monetize across the platform. During the 2010s, that market opportunity expanded rapidly as major global brands shifted advertising budgets away from television and desktop media toward mobile-first digital platforms. Snap positioned itself aggressively inside that transition. The company developed full-screen mobile video ads, branded filters, sponsored augmented reality lenses, discover advertising, creator partnerships, and interactive campaigns designed specifically for smartphone behavior. Snap's strongest advantage was not simply scale, it was engagement quality. Advertisers increasingly believed younger audiences on Snapchat were highly active, culturally influential, and more difficult to reach through older social media platforms. That made Snapchat especially valuable to entertainment companies, fashion brands, technology firms, sports leagues, consumer products, and mobile-first advertisers competing for Gen Z attention. At the same time, Wall Street increasingly viewed Snap as a high-growth advertising platform capable of scaling revenue rapidly as mobile engagement expanded globally. By the late 2010s, the company was already generating billions of dollars in annual revenue, while expanding aggressively across augmented reality, creator monetization, video advertising, and mobile engagement products. But the economics of digital advertising carried structural pressure that many investors initially underestimated. Snap's revenue growth depended heavily on advertiser confidence, platform relevance, engagement quality, and measurable campaign performance compared against competing social media platforms fighting for the exact same advertising budgets. That meant Snap could not simply remain culturally popular. The company also needed to continuously prove its advertising systems delivered strong business results inside one of the fastest-moving and most competitive markets in the technology industry. As Snap expanded deeper into the global social media industry, investor excitement surrounding the company accelerated aggressively across Wall Street and the broader technology market. Daily active users continued rising rapidly, while Snapchat increasingly became one of the most influential mobile platforms among younger audiences across the world. By the late 2010s, Snap had grown into a business generating billions of dollars in annual revenue, while hundreds of millions of users continued opening Snapchat repeatedly throughout the day. Externally, the growth narrative looked extremely convincing. The company expanded augmented reality features, creator partnerships, discover content, mobile video systems, advertising tools, and camera-based engagement infrastructure at enormous scale. What made Snap especially attractive to investors was the intensity of engagement underneath the surface. Many users opened Snapchat dozens of times per day, while advertisers increasingly viewed the platform as one of the strongest ways to reach younger mobile audiences online. At the same time, competitive pressure inside social media was already becoming more aggressive. Instagram had successfully copied stories across Meta's ecosystem, weakening one of Snap's most important product advantages and increasing pressure on Snap's long-term differentiation strategy. Then another major shift started emerging across the industry. After ByteDance merged Musical.ly into TikTok in 2018, the platform began expanding rapidly across global mobile markets while introducing a much more aggressive form of algorithm-driven short-form entertainment. Unlike Snapchat, which relied heavily on friend-based interaction and communication between existing users, TikTok focused aggressively on content discovery, powered by recommendation algorithms tracking watch time, viewing behavior, and engagement patterns. That difference became structurally important. Snapchat was strongest when users opened the app to communicate with friends, share moments, and maintain private social interaction. TikTok increasingly trained users to open mobile apps primarily for endless entertainment, viral discovery, and creator-driven content consumption without needing strong social connections inside the platform itself. As TikTok expanded globally, creators could suddenly achieve enormous reach through algorithmic distribution even without large follower bases beforehand. That accelerated a major shift in the attention economy, as mobile engagement increasingly moved towards highly addictive recommendation-driven entertainment feeds operating at massive scale. Snap still remained culturally powerful and deeply embedded inside younger communication behavior. But underneath the surface, the company was beginning to discover that defending user attention had become dramatically harder inside a social media market increasingly dominated by algorithmic entertainment competition rather than traditional friend-based interaction alone. As TikTok expanded deeper into global mobile markets, the structure of the attention economy started changing much faster than many social media companies initially expected. What initially appeared to be another fast-growing entertainment platform was increasingly becoming a major structural threat to how user attention was distributed across the mobile internet. TikTok's recommendation system proved exceptionally powerful at maximizing watch time, engagement loops, creator discovery, and endless short-form content consumption across smartphones globally. Users no longer needed strong social connections, large follower networks, or existing friend groups to remain highly engaged inside the platform. The algorithm itself continuously delivered personalized entertainment feeds capable of keeping users engaged for extremely long viewing sessions. That created a major behavioral shift across social media. Snapchat had originally become dominant through communication between friends, private interaction, stories, filters, and camera sharing behavior tied closely to real-world social relationships. TikTok increasingly shifted mobile behavior away from communication-first engagement toward passive entertainment consumption driven heavily by algorithmic recommendation systems. The creator economy also started changing rapidly underneath the surface. TikTok's discovery engine allowed unknown creators to achieve massive viral reach almost instantly, which accelerated creator migration, audience growth, and platform engagement at extraordinary speed. Advertisers increasingly followed whichever platforms generated the strongest engagement duration, creator momentum, measurable ad performance, and user attention at scale. That created mounting pressure on Snap's advertising systems and long-term growth expectations. Snap attempted responding through Spotlight, creator incentives, expanded content systems, and short-form video initiatives designed to compete more aggressively for entertainment engagement. But competing against TikTok required much more than adding short-form video features. It required competing against an entirely different attention distribution system optimized around algorithmic retention and endless content discovery. Snap still remained culturally influential and retained hundreds of millions of users globally, especially among younger audiences. But underneath the surface, the company was increasingly discovering that defending communication-based engagement against entertainment-driven algorithmic ecosystems was becoming structurally harder inside the evolving mobile attention market. As competition for mobile attention intensified, Snap's business model started facing a second major structural problem underneath the surface. The company depended heavily on digital advertising revenue, which meant long-term growth required advertisers to continuously believe Snapchat could deliver strong targeting precision, measurable performance, and efficient customer acquisition across mobile audiences. For years, that system helped power Snap's rapid expansion. Advertising revenue surged, brands aggressively pursued younger audiences on the platform, and Snap increasingly scaled its business around data-driven mobile advertising systems competing directly against much larger technology platforms. But the economics of digital advertising started becoming significantly more unstable during the early 2020s. Then, Apple introduced app tracking transparency, often called ATT, which dramatically changed how apps could track users across mobile devices for advertising and performance measurement purposes. That change became enormously important for the entire digital advertising industry. Many platforms suddenly lost portions of the behavioral tracking and attribution systems advertisers relied on to measure campaign effectiveness, user targeting, and conversion performance across mobile apps. Snap was hit especially hard because the company depended heavily on mobile advertising efficiency to sustain long-term revenue growth expectations. Advertisers became less certain about targeting precision and measurable ad performance, while portions of the industry started reducing spending or reevaluating digital advertising strategies altogether. In 2021, Snap publicly warned investors that Apple's privacy changes were affecting the company's advertising business much more severely than expected, which triggered a major shockwave across financial markets. Snap's stock fell sharply as investors increasingly questioned how resilient the company's advertising engine remained inside a rapidly changing digital ecosystem. At the same time, TikTok continued capturing massive amounts of global user attention, while Meta, YouTube, and other major technology platforms intensified competition aggressively across short-form video and creator-driven advertising markets. That combination created mounting structural pressure on Snap simultaneously from multiple directions. The company still retained hundreds of millions of users globally and continued generating billions in annual revenue, but maintaining the original hyper-growth expectations attached to the business was becoming dramatically harder. Snap's challenge was no longer simply growing users. The deeper problem was proving the company could continue monetizing attention efficiently while platform competition, advertising economics, privacy regulation, and algorithm-driven entertainment systems were all evolving rapidly at the same time. What originally looked like one of the strongest mobile advertising growth engines in social media was increasingly becoming a platform fighting to defend monetization efficiency inside a much more hostile and structurally difficult digital attention market. As Snap's structural pressures intensified, the company's original hypergrowth narrative started weakening much more visibly across Wall Street and the broader technology industry. What investors once viewed as one of the future dominant platforms of mobile attention was increasingly being reevaluated as a company facing slower growth, advertising instability, rising competition, and much harder monetization conditions. Snap still retained enormous global scale. Hundreds of millions of users continued opening Snapchat regularly across mobile devices, while the platform still generated billions of dollars in annual revenue. But maintaining the explosive growth expectations attached to the company during its earlier expansion years was becoming dramatically harder. Investor confidence weakened heavily after repeated concerns surrounding advertising performance, platform competition, and slowing growth momentum spread across financial markets. Snap's stock experienced massive declines from earlier peak-era valuations, while tens of billions of dollars in market value were erased during periods of severe investor reassessment. At the same time, the company itself started entering a much more defensive operational phase. In 2022, Snap announced major restructuring efforts, including layoffs affecting roughly 20% of the workforce, as the company attempted reducing costs and stabilizing operations during worsening market conditions. Several projects were reduced, canceled, or deprioritized as Snap pulled back from portions of its earlier aggressive expansion strategy. The company scaled back initiatives involving hardware products, creator programs, original content expansion, and experimental divisions that no longer aligned with immediate profitability and operational priorities. That transition became psychologically important for investors because it signaled that Snap was no longer operating primarily like a hyper-growth company, expanding aggressively into the future. Instead, the business was increasingly behaving like a platform attempting to protect profitability, defend monetization efficiency, and stabilize operations inside a much more hostile digital attention market. At the same time, TikTok continued dominating short-form entertainment growth globally, while Meta and YouTube aggressively expanded competing recommendation video ecosystems across mobile advertising markets. Snap still remained culturally influential, especially among younger users, and the company itself continued operating globally at massive scale afterward. But the original growth thesis that once convinced investors Snap could dominate the future of mobile attention and digital advertising at extraordinary long-term scale had weakened significantly underneath the surface. The company had not disappeared. The deeper reality was that Snap's growth engine had entered a structurally harder phase where defending user attention, creator relevance, advertising performance, and monetization efficiency simultaneously became far more difficult during the company's earlier hyper-growth years. Snap's rise and structural slowdown ultimately became one of the clearest examples of how difficult it is to maintain long-term dominance inside the modern mobile attention economy. At its peak, the company convinced investors that Snap could become one of the defining communication and advertising platforms of the smartphone era. The growth story initially looked extremely powerful. Hundreds of millions of users opened Snapchat constantly throughout the day. Advertising revenue expanded aggressively, and Wall Street increasingly viewed Snap as a company capable of shaping the future of mobile communication, augmented reality, and digital advertising at enormous scale. But the deeper the company expanded, the more Snap discovered that maintaining dominance inside social media required much more than simply growing users. The platform needed to continuously defend attention, creator relevance, monetization efficiency, advertising performance, and product differentiation simultaneously inside one of the most aggressive competitive markets in technology. Then, the structure of the mobile internet itself started changing. TikTok accelerated the shift toward algorithm-driven entertainment feeds. Apple's privacy changes weakened portions of the digital advertising system, and social media competition increasingly became centered around recommendation algorithms, creator ecosystems, engagement duration, and endless short-form content consumption at global scale. Snap still remained highly influential among younger users and continued operating globally with hundreds of millions of active users and billions in annual revenue afterward. But the original hyper-growth thesis that once convinced investors Snap could dominate the future of mobile attention at extraordinary scale weakened significantly underneath the surface. The company was no longer being evaluated primarily as an unstoppable expansion story. Instead, investors increasingly viewed Snap as a platform fighting to defend monetization efficiency and relevance inside a much more structurally difficult digital ecosystem. What ultimately limited Snap was not the absence of users. The deeper problem was that maintaining profitable long-term growth became dramatically harder once platform competition, creator migration, advertising pressure, privacy disruption, and algorithm-driven entertainment systems all intensified simultaneously. Snap still remained highly influential among younger users and continued operating globally with hundreds of millions of active users and billions in annual revenue afterward. But the original hyper-growth thesis that once convinced investors Snap could dominate the future of mobile attention at extraordinary scale weakened significantly underneath the surface. The company survived, the platform remained globally relevant, but the extraordinary expansion narrative that once defined Snap's future had ultimately encountered structural limits inside the modern mobile attention market.